Hey, my name's James Nicholson. I hope you guys are well. Now, in this video, we're going to talk about inflation, its jump, and what that means for property investors and homeowners alike. So while you're here, make sure you stick around to the end. There's a lot of bad stuff from inflation, but there's also a very good thing that I'll share with you at the end. So stick around to the end. Now, while you're here, please do make sure you join us on this journey. We're on the way to 5,000 subscribers at the moment. We're sharing all our property investment knowledge. And this channel has grown really significantly over the last few months. So please do subscribe and hit the bell notification. And while you're there, like the video as well, because that really helps with the YouTube algorithm. So, inflation, the data came out last week. It's jumped again. That was not expected at all. And it was mostly down to cost of food that has gone up significantly in the last month. And so inflation has now jumped back up above the 10% mark to 10.4%. Now, why does that mean it's bad news for property investors and homeowners? Well, when inflation is high, what the government needs, or not the government, the Bank of England have to do is to keep raising interest rates in order to squash the inflation. Now, in normal times, you would raise the interest rate to higher than the inflationary amount. That hasn't been possible this time because we were pretty much at zero, and you can't really go from 0 to 10% interest rates without absolutely causing mayhem in the markets and making a huge amount of people lose their home. So what they have been doing is 11 consecutive months now, they have raised the interest rates and that has happened crazy amount of times now. So we're now at 4.25% on our interest rates as a base rate. Now, as investors, that means that we're going to pay more to borrow money. So that's not great news, is it? We don't want to be paying more. Now, also as investors, what we've got to really understand is that this is harder for our tenants. And so what that means is that they're going to struggle. It's going to be harder to pay rent. It's going to be harder for them to pay their bills. And that's not good. You don't want tenants that are stretched. You want their life to be easier so they can pay you on time. That's an important part of running your property business. And so that's not a great scenario to be in. And so if there's any way that you can help your tenants, then you should be looking at that. Now, we've got a portfolio of properties between me and my daughters, Georgia and Amelie. And we have increased rents across the portfolio, but not to market rate. We only put it at market rate if there's a void, as in somebody leaves and then new people come in. With our existing tenants, we didn't put it up with inflation. We put small amounts up because you need to keep it going up, but we didn't go for the full hike. And if you can afford to do that, then it's the right thing to do. You'll get better tenants, they'll respect you more, and so that's an important thing. And so tenants struggling to pay is a big downside of this inflation. The interest rates going up is a big thing as well. Now, another thing that's potentially coming down the line is because banks have been going under in America. We had 2 big banks that went under in the last 2 weeks. Now, liquidity is disappearing or getting harder. So it's going to get harder to get money. And that's what happened in 2008. It was harder to get loans. It was harder to get mortgages. Banks are more cautious when they're lending out money. They're going to have a stricter criteria. Your affordability is going to be less because the mortgage payments are more. And so that is a downside from this. Now, also what we have seen is we've seen house prices dropping. Now, if you've got a portfolio, that's not great because your value, your assets, your net worth is declining at times with this. And so we had some quite big drops last year. We've not had much this year in 2023 so far. Could still happen. No one knows for sure. But house prices declining is negative. That's not great. But it's also positive. So if you're looking to get into the market, if you're a first-time buyer, or you're looking to buy new deals, then obviously if those deals are cheaper, that is a significant win. Now, inflation can be very, very good for property investors as well. And so what's happening with inflation being so high, the debt you've got is getting eroded. And so let's just say that you owe the bank £100,000. What £100,000 will buy you today is 10%, not 10 times, 10% less than it would have bought you last year. And so the value of that money has decreased by 10%, meaning the debt has also decreased by 10% because of that inflation. So if you're like me and you owe many hundreds of thousands of pounds, then that's a positive thing. The money that you owe is worth less, and so you kind of are depreciating that debt very, very faster than you could do in any other way. So that's pretty much one of the only positives of inflation. But this inflation is expected to start to ease in the next quarter. So let's see how that pans out. But what I would say is, if you're a property investor, now is the time to start looking for deals, because there are some great deals on the market. There are deals that have that people just need to sell, right? So there are prices that are lower. There are people that need to sell. And so go out there and start looking for really, really good quality deals. But that's the impact of inflation. It's not great, but there are some positives in there. The debt that you've got is being eroded. If you're mortgage free, then it's more the negative stuff. Your rent is going to be harder to achieve and all of these things as well. That's it from me. Do check out all my other content on my channel, including this video right here.